What's going on, ladies and gentlemen? Welcome back to the channel. So before we jump into the analysis, guys, a few things I want to say, and that is that my thoughts and prayers go out to all the victims and the families that are currently in the midst of this whole chaos in Eastern Europe, okay, in Russia, Ukraine. War is not good, and this is a serious matter. So please, 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 um, let's be thankful and be grateful for everything we have because there are, people are suffering right now. Okay. And so I hope and my prayers go to everybody that are suffering. And the last thing I want to say is that, I hope that this world gets better because we are going through a lot at the moment. All right. So with that being said, guys, I want to present to you the SPY. I want to show you guys, even though we had good price action today, we bounced off key levels. There's always alternate counts, right? Somebody in chat over at Trending Waves was asking if there's an alternate count because we did respond positively, all right, after Biden and gave that press conference and a lot of the sanctions came on board because that gave clarity in the markets, okay? And the markets do not like uncertainty. They like to be certain of things, right? And so when that happened, we saw something positive, price action to the upside. So let's dive into the analysis, guys. But before we do, don't forget, give this video a thumbs up, subscribe to the channel, and hit that bell icon so you'll be notified when I upload the videos. Okay, as an alternative, join Trending Waves. The link to the Discord group is pinned down in the comments section. So I'm going to show you guys the alternate count. Okay, this may have already been the bottom. All right, we may very well be at the bottom. Okay, so I'm going to show you the counts for SPY and Qs, and let's take a quick look at the daily time frame. So I want to show you a couple of things here, right? Obviously, post-COVID, we have 1, 2, 1, 2, 3, 4, and 3. I mean, 5 and 3, and then the fourth wave. So there's a guideline in Elliott Wave that states that corrections of the same degree, meaning of the same degree here in the yellow, tend towards equality in time and magnitude. Okay, so what does that mean? That means that we need to pair up these two corrections, and by doing that, we just take a simple date range, right? We take this date from the high when it started to the low when it completed, and we see that it completed in roughly plus or minus 58 days. This whole correction completed in about 58 days from September through October. Okay, now we are looking at this correction from January, right? From January towards the end of, or towards this day, February. So you see here, right, that these two corrections are pairing up in time, likely, right? They're very close, 58 days versus 52 days. Okay, so that's a positive thing. That's check number one. Now that's time. Now in magnitude, okay, we'll take a look at how much they declined by. All right, so this one did roughly, please excuse that, this one did roughly 10, let's call it 11%, right? 11%, just to round it up. So how much did this one do on the SPY? This one did roughly 12%. Okay, so 11 and 12% respectively. So in magnitude, they are almost pairing up. So what does that tell me as a trader? What does that tell me as an Elliott Wave technician, right? What does that say? It says that we are meeting guidelines. All right, this was sideways. This is the directional guideline of alternation. So several things here in the global aspect of the chart and Elliott Wave guidelines, we are pairing up these two corrections of the same degree. So that's a big positive thing. Another positive thing here that we're looking at the markets in the chart is that wave 4 is at 30, bounced heavily, right? Found really clear support at the 38.2% retracement of wave 2 and 3. So that's check number 4. Okay, we see that we have divergence from the low of January 24th to the low, or to the higher low of February 24th. All right, 1 month in between, while price action made a new low. Okay, so that's another positive thing. So see, we have evidence. We are gathering evidence to justify a potential bottom in this market. Okay, so there's key levels, key things that we have to be aware of. So just, this video is going to be a while, so just bear with me here, and I hope you guys are listening. I hope you guys are paying attention to this, because I don't want you to just buy blindly. Okay, we're looking at the global aspect, we're looking at the daily time frame, and then we're going to zoom into the hourly, even down to the 5-minute time frame, to dissect what could possibly the options be. Okay, so let's keep on going, guys. Okay, so now that we have that out the way, right? Two corrections of the same degree pairing up with each other in time and magnitude, a 38.2% retracement support in the wave 4, and divergence in its completion. Okay, divergence here on January 27th, rather. Yeah, 27th, 26th, 24, and February 24. All right, now let's go down to the 1 hour time frame. Okay, so in here in the 1 hour time frame, this has always been the preferred count that we've been looking at, guys. So when we completed our wave 3 in the primary degree on January, the beginning of January, we sold up in wave A and B, right? We've originated this trend line, which we have to keep our eyes open for. Okay, this is a trend line that is of key resistance and very important because it was confirmed here on January the 12th. Let me highlight. Okay, January the 12th, sold off into the C wave. Okay, we try to break above it on February 9th, and now we sold off here. Now this count here suggests that perhaps, just perhaps, we have already bottomed, and there are 3 zones of support in the fib levels that are sustaining this idea. All right, so from the primary 3 wave high, ABC, down to the W, so this is W, X, and Y, sorry, W, X, and Y to the X, resistance, A, B, and C to the Y. Now, what are those zones of support? Let's take a look. So in the blue, right, so if you guys are familiar with my sort of strategy here, how to sort of compare up my organization, rather, right? The blue count here is associated with this blue fib level, okay? And we have here the A versus B found support at the 1618, okay? 1618, which was 412.77. Yeah, 412.77. All right. So if retracement, you take this tool and you go from the high to the low to the high here of B, and you find yourself into the 1618. Okay, that's appropriate. Not bad. Check number 1. Now we go to the higher degree, which is the intermediate degree, wave Y. Now this wave Y found a 76% retracement support of its higher degree wave counterpart, right? So this is the W, X, and Y. So we take another retracement and we do the following, right? And we see that a 76 comes into support there. So 2 levels of confluence, all right, of the higher degree and the smaller degree. Okay, now lastly, we have the 38.2% retracement at 412.88. So guys, we have these 3 levels of support. Okay, 1, 2, and 3 of the higher degree, small degree, and intermediate and minor degree. Right, so primary, intermediate, minor. All right, letting us know that we have found support, and then we see a bounce out. Okay, we see an aggressive move to the upside. This is positive. This is good. We're not seeing too much overlap. Now let's go down to the 5-minute time frame. Okay, in this 5-minute time frame, let's see what the response was out of this low. So we have the makings. We clearly see 3 waves, right? We see 1, 2, and 3. Now, what are the evidence here? So we take a retracement from the low to this high, and we see that a 38.2% retracement, maybe a 50%. Okay, found support. That's check. So 1, 2, and now where's this third? So we take an extension to the low to the high, and we are just above the 100% to the 1618. Okay, so the 1618 is coming into resistance. Now, what I'm looking for into tomorrow and into next week is the following. So here's what I want you guys to pay attention, because this will be confirmation to the upside. All right, now we have evidence of 3 waves. We want to see the 4th wave down. So what does that mean? What does that look like? We want to see this, right? So 1, 2, 3, 4, and 5. So this 4th wave, guys, pay attention. All right, look at this. This 4th wave cannot go beyond the territory of wave 1. I mean, it can slightly, but not close below it. All right, we can kiss it, touch it, hug it, whatever, but bounce right out of it. Okay, guys. It's important for you to know that. That will be sign number 1 that we are completing a 5-wave progression, and we are going to move on higher. And this was the low wave 4, and then wave 5 is here, and then off we go. But we still have the Fed in a couple of weeks, so that's still an uncertain situation. But there were several things that came out of the news today and the media that will suggest otherwise. But that's something else that we got to get into for another video or a discussion over in the Discord group. Anyway, so a pullback to stay above the zone in 3 waves, and we see a positive reaction out, will let us know that this is already a 5 waves in the making, which will be a positive thing. Now, taking you back up to the 1 hour time frame. Once we see that happen, ladies and gentlemen, we want to see price action break above here. All right, 435.36. So let me note that over here. We want to see price action break above the low of wave A. Okay, so we want to see the following. We want to see a 1, 2, 3, 4, and 5. All right, and then another pullback, and then a break, and then a retest and a break. Okay, this scenario is the ideal scenario. But these two levels here, okay, the pullback above the wave 4 and the break above the wave A are our two confirmations in the SPY that will let us know that this is, it's all clear, we out, let's go, new all-time highs. Okay, and at that point is where we will take a trade, not anytime before that. Okay, because I don't want to see, likely we can do it right now, it'll be a risk, right, on any pullback, and our stop will be above this or below this zone, right? And then our confirmation to add more to our position will be a break above the wave A. Okay, guys? So I hope this helps. I hope this is clear. All right, now let's go over to our alternate count, which will suggest that we see further downside to the for the price action to the downside. So we're gonna hide this bad boy. We're gonna go zoom out a little bit. I'm gonna delete this. Actually, no, I'm gonna put this here and and hide it. Why didn't you hide? Oh, here we go. Oop. That's not it. Sorry, guys. There you go. All right. So zooming out and the alt count number 2. Okay, so here it is. Same deal. The exception and the difference between these two are that instead of this being a W, X, and Y, this is a 1, 2, 3, 4, and 5 to the A, truncation in fifth, 3 ways to the B, same deal, the resistance trend line. Then we have 1, 2, 3, 4, and 5. Now, if you've been following the channel and you are now familiar with wave counts, right, you will know what would invalidate this wave count. It's the same thing from the alternate count. The alternate version has the same scenario, right? If we break above the wave 1, then this wave 4 is invalidated, right? Because we can't close above it, right? And we cannot stay above it. If we retrace and we keep on dipping, then it is likely that we are going into a fifth wave. Now, what is our retracement here? Our retracements is exactly the 50%, and that's not good. All right, I don't like seeing that. A 50% retracement at 428.93 represents a 3-wave pullback, a potential rejection. Also, we have here resistance. Okay, that was one support, now it's becoming resistance. Support, we broke down, and now we're trying to retest that zone. So we are still not out of the woods just yet, guys. Okay, if we go back into the history, we see that this was support here, slight support here, and that's it, right? Support now becoming resistance. Support now becoming resistance. So guys, this zone, if we start breaking low, okay, let's take a look where the SPY is at right now post market. We're still hanging around, we're still good to go, we're still holding the highs, but it's still early to tell. So 50% retracement, and this 435-ish area will let us know if this is the count or not. Okay, guys, so we still have a little bit more confirmation left to go. This is a pretty important video that I want you guys to pay attention to, because this will dictate the next few sessions whether or not we are going to break out. All right, so let's take a look at the Qs. So in the Qs daily time frame, same deal. All right, we have 1, 2, 3 looking for 4. As I mentioned to you guys yesterday, a break south of 303 or the wave 1 will invalidate this whole wave structure, because wave 4 cannot go into the territory of wave 1. All right, but today's response was pretty good. So let's look into this. Let's do the same exercise, right? Let's look at actually it's fine. Let's look at the 1 hour time frame, and let's just focus on this, because this is what's important here. So let's reset the chart. All right, so in this scenario, guys, actually no, this is the scenario here, which suggests that we met our low, right? WX ABC completed into what appears to be a support. Let's take a look at what the fib levels are. So let me just hide this. Oh, actually, this red line here represents the wave 1 high. Okay, so let me just write that down. So must hold. All right, so this is the must hold scenario. Okay, so we have A, B, down in C of Y of 4. So 4 came into a 618 or 50-ish, right? So we sandwich between the 60% and the 618. It's good. It's positive. Now, where did wave Y complete? So if we take, again, the same exercise as we did for the SPY, we go from the high to the low to the high of W, all right, of X rather, and we will look at the, this looks more like a 618, no, 786, yeah. So a 786 at 315, just shy of it, or just a little bit above it. Okay, so we have not as clear cut evidence like in the SPY, but we are within the zone, within the range. Okay, and now where did C come to? C came in towards a potential 1618, I say. Yep, a 1618. All right, so look at this, guys. So we have 3 zones of support that are in confluence that are supporting evidence that perhaps this was the low. All right, so we have the blue count, right? The minor degree 1618 holding support. We have the intermediate degree 786 holding support, and we have the 50% of the primary degree holding support. Again, this zone here was key for us to hold, and we see a positive reaction out of it. Now, invalidation of this level will obviously come if we break below the zone. Now, going down to the 5-minute time frame, just like we did in the SPY, you know, we still have evidence here, right? Let me just organize this. This has evidence, right, of a 3-wave progression. Now we need the 4th wave pullback to stay above the zone of 330, and then off we go. If we start breaking above this wave A, right, after the pullback, then we're off to the races, guys. We are off. Okay, I will start taking positions, and then we'll set our stop areas. But for that matter, we're looking pretty good. Okay, so now let's go over to our alternate count. And the alternate count, let me just delete this here. So our alternate count is the bearish here. So our alternate count will suggest that we still have WXY. Okay, we still find ourselves lower. Let's go down to the 5-minute time frame. Let's reset. That would mean that if this was B, this is 1, 2. No, sorry, this is 1, 2, 3, 4, and 5. Okay, guys. So that's pretty much it. You already know what to do. You guys already got your marching orders. I'm pretty excited for what's to come. We're gonna be ready over at Trending Waves. I hope you guys stay long enough throughout the video, because this was pretty clear and pretty important to review. Okay, join Trending Waves. The link to the Discord group is pinned down in the comment section. Give this video a thumbs up. Subscribe to the channel. See you guys bright and early tomorrow. Take care and good luck. Bye.